Polkadot, is it ready to moon? On the 4th of July, I did a particular video. Now it's unfolded almost textbook style. That's what we're going to dive in today. Has Polkadot hit the low? And is it ready to do a flip around, a reversal, and then moon? Eventually it's going to. Is now the time? Well, that's what we're going to cover today. So if you like today's video, hit the like button, subscribe, hit the bell notification. We're close to 1,000 subscribers. So thank you for being part of my first 1,000. I humbly really do appreciate it. Keeping in mind that 10 weeks ago, we was on 5. So it was great. And if you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity. Here it is. How to invest like a pro. I've also been trading currencies for over 15 years. Now, last 4 years, really focused on crypto, blockchain, the innovation. I was also featured in the best-selling book, High Probability Trading Strategies, which was back in 2008. 2008, phenomenal book. And we use a lot of this information with what we're going to cover today. So let's dive straight in. So on the 4th of July, I did Polkadot. I did a great video on Polkadot. And what we said was, so this is literally the video on YouTube. We said, it looks like it's made this wave 1 up here. And we've had a pull down, which is a wave A. And then there's ABC correction up here of a B. And then we look like we're unfolding for a final leg of a wave C. Now, a wave C typically unfolds in 5 waves. 1, 2, 3, 4, 5. Sometimes like 50% to 70% of the time in all markets, not just crypto markets, the wave structure is identifiable and it gives us practical information of the psychology of the market. When that's the case, we want to apply that technical analysis. If it's not evident and it's kind of a bit sketchy and a bit ropey and it doesn't really speak to us, hey, we just go next, right? We don't want to just force any Elliott wave counts. So would you like to see us to jump in to what's happening right now with Polkadot? Of course you do, you're watching this video. So let's also just cover, on this video, let me just forward it slightly. Let's have a quick look. There was a section where I pulled up the indicators, if I can find it. Here we go, I think it was down here. Boom. And what I said was this. I said with the indicators, what we should see, if I can get it right, boom, this one here. I said what we should see with the momentum indicators is the momentum going down, and when we have the next bullish crossover on the underside where the blue line goes above the red line, that should coincide close to the low of a 1, 2, 3, 4, 5. And if that's the case, then we're going to have pattern, price, time, and momentum indicating that we're at or near a low for Polkadot. So let's jump into our live chart. So let's jump into the live chart and let's have a look. So we've got this big move up. Now, if you're not familiar with Elliott waves, you can watch one of my previous videos. It's 1, 2, 3, 4, 5 on the way up, an ABC correction. And a wave C tends to break down into 5 waves. So let's just quickly make sure we're on the same page. Quick recap. On a macro picture, we've done a massive move to the upside, right? And we're calling that a wave 1. That's Polkadot, right? Since, when was this? December 2020 up until May 14th, we went from a price of $5 all the way up to around $47. Romeo, got a dog over here. You might want to make an appearance. No, he's leaving. He's like, okay, no, he's ready for his breakfast. Okay, so then we had a brilliant pullback on the way down. This nice pullback, and that's our macro picture, a wave 1 and a wave 2. And now wave 2 typically breaks down to 3 waves, which is an A, B, C. A, B, C. So, just so you know, this is Romeo. I've been married for 10 years now, by the way. This is my screensaver. I made this collage for my wife. In the top left-hand corner, if you can see it, is this little dog. His name's Romeo. This is a picture of him, me carrying him over a little river over there. So if you're just wondering who the heck is Romeo, that's who Romeo is. So now with wave C, wave ABC of a wave 2, what we have here is this here. Look, this wave A, that's what we're marking as a wave A. We had this wave B. Now normally a wave B is a bit more, it would be a bit more, minimum 50%. It didn't make it, only got to like 23%. So it was a lot lower than anticipated. And then we were anticipating this wave C into a 1, 2, 3, 4, 5. That was the structure that we were anticipating. So if I just jump back into this video and we just go back. At the time of the video, if I can just get that right moment, it's just over here on the 4th of July. We were around here roughly, which is the equivalent of, and it's great just to see how the markets unfold. So 4th of July, let's just kind of go back in time. 4th of July, boom, around here, right? So that's what the market action was looking like for when we did the last video. Because what we're doing with Fibonacci and Elliott waves is we're doing leading indicators. We're looking at the future. It's all well and good looking at hindsight, like when the information has passed and looking back and saying, hey, that's what it looked like. But we're trying to forecast in the future to give us a high probable outcome so you can manage and best manage your positions. No guarantees. Doesn't mean it's going to exactly unfold as anticipated. We're just playing a high probability game over here. So what we said here was, look, wave 1, a wave 2, a wave 3, and we can move this slightly to the left over here. We're saying we're looking like a wave 4, and we should see this final leg down of a wave 5. Now we drew this pink box also that says, look, we've done some time analysis that said we should see the maximum time that the low should take to form is by July 22nd. I think today's July 22nd. Today's July 22nd. Today's July 22nd. Today's like the typical maximum time. So how has it unfolded since we did that last video? Well, now we've seen it, but let's just unfold it day by day. So we've got this slightly newer high. So now we can go, okay, this now looks like the wave 4 high. And does it go to a new low and start to form a lower low? And the information, now that we have the information, the answer is yes. So let's just have a look at the last few days. Boom, it's gone lower, lower. Now we are on, as of the data, 17th of July. So let's just say we go back in time 5 days, because at that time we could have done the following, which is we can, let me just clean this up now. Let me just clean this up. We can get rid of this. We can also get rid of this. And a typical correction minimum time it takes is 50%. So this is the time that we're looking at, which was here. So what we're looking at is this part of the market here. This 1, 2, 3, 4, 5. Can we do a 5th wave Fibonacci price, alternate price projection? Say, hey, this is a typical place where a wave 5 normally ends. So if I now just get rid of, let me just see what this is. This is boom. So we're going to get rid of this because we're going to update it. We're going to get rid of that one's fine. And this one is also fine. Yeah, perfect. So now we're going to just do one last thing. I just want to double check this here. I want to get rid of this one as well. Because now we've got this new information. It made a slightly higher high, wave 4, but now it's gone below this low. So just so you're clear what I'm saying, before we did 4th of July, it was roughly around, this was the high. Now we made a higher high over here. So that's more of a confident wave 4. Now this was the previous low, and this price has gone below that low. So that confirms a wave 4, and they're becoming close towards what looks like an end of a wave 5 of a wave C. So now we can even move this over here and say like we're coming close to a wave 5 of a C of a 2. That's looking like the highly probable outcome. Look at the momentum. So these arrows is what I drew on the 4th of July, and this was before it unfolded. And we said we should expect a bullish reversal, and when we do, we should see it should coincide as a confluence of events, things that are happening that are indicating the same thing. Multiple things indicating the same thing. So here you can see that the momentum is oversold. So if we now get rid of these arrows, so at this moment, again, I've backtracked the date slightly, and we're going to unfold the data just so we see where we are today. But let's just do a projection. So Fibonacci, if you're not familiar with it, is based on the golden mean 1.618, where Ralph Nelson Elliott and a few others really discovered that it applies in nature significantly. That's what Fibonacci discovered, but it also applies to markets and mass psychology. And that's what we're measuring when we see the lines that we're drawing. So a typical end of wave 5 is measuring wave 1 to wave 3, projected from a wave 4. And the typical maximum is 100%, and the most common is 62%. And you can see that 62% has this cluster. That means it's a very strong zone. So we're going to just keep it at that zone. So just keep the chart nice and clean. There is another number, which is an alternate price, external retracement. That's the one. That's what I'm looking for. External retracement. It means we're going to measure the wave 3 low to the wave 4 high. And the two numbers that are most common for the end of a wave 5 is 1.217 and 1.618. Let me just make sure that doesn't look right. Let me just do that again. Give me 2 seconds. Let's just do that again. Boom. 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 And there we go. Oh no, that is right. Yeah, perfect. Perfect. So we're getting a cluster down here. That's what we're getting over here. So now we've got this zone, this price zone down here. And then last but not least, a wave 5 and a wave 1 have a real direct correlation, So this is the wave 1 that we're referring to, this over here. I hope I can get rid of this magnet. This wave 1 and what we're seeing here as a wave 5. Often they are identical or close to identical, and there's a direct relationship between the two from a mass psychology perspective. So what we're going to do is we're going to measure, I'm going to draw it like this so you get a clear picture, how much price movement was the wave 1, and then do a projection from the wave 4 high to project what's likely to be the end of a wave 5. So the typical is going to be, we're going to use something called the trend-based fib extension. We're going to measure this wave 1, so it just takes that price. We're going to project it forward from the wave 4 high. And the most typical is 100%. And you can see it's clustered right in that zone. That gives us a very high probability that we've got multiple Fibonacci price projections. We've got price on a pattern on multiple degrees. We've got an A, B, C, we've got wave 2, and we've got a 1, 2, 3, 4, 5 of C over 2. So we've got those two things. We've got the basic time analysis, but now we've also got this momentum. So now Polkadot, it looks like, and you got to understand, only you can make the decision. We can only work with probability. It doesn't mean it's a guarantee. That is so important. That's why we have risk management. Some people think just because Fibonacci retracements, any wave patterns are showing, hey, we can go all in on one project. No. That's not what the elite do. We want to model the elite, so you have proper risk management, so you can go, right, if it's right, this is what's the likely outcome. If we're wrong, this is the likely outcome. So you do proper risk management. So let's just let the data unfold. So now we're going to go do the last few days. Boom. This is where we are as of today. As of today, July 22nd, beautifully, this is like textbook stuff. A wave, what looks like to be a wave 1, 2, 3, 4, 5. Right in this time and price zone, we've had a momentum bullish reversal. I haven't checked the weekly. Let's just double check the weekly. Yeah, the weekly is deeply oversold, and it has been for a while. So the downside movement based on the weekly should be sideways, as in limited on the downside. And when you have a coincidence of price, pattern, time, and momentum, a reversal is inevitable, but you still apply proper risk management. So what will be the first strong indication that the correction has been complete? Well, we need an overbalance of price, right? Time and price, but overbalance of price in particular. You may have heard me talk about this before, but if we just look at this movement to the downside, right? This movement here, and let's just move it over here so it's clear. What is the biggest move to the upside that's occurred? Well, we've had this wave 2. It's been that big. Let's just draw it in visual terms. We've had a wave 4, which has been this big. Yeah, so clearly the wave 2 is bigger. So the most clear overbalance of price would be a move greater than that amount, right? So that means a price going above roughly $16, definitely $17, which actually coincides with this high, which is the next indicator. A close above this wave 4 high would also indicate very, very strongly that this is the wave 5 of a wave C of a wave 2. Okay, all right, we're getting somewhere, right? Hopefully that's making sense. And let me know in the comments below, what makes the most sense to you, or what do you find most powerful? Is it the Elliott wave counts, or is it the Fibonacci price projections? And what do you want me to spend more time on? Elliott wave counts and kind of give you a bit more detail on how that really works, and Fibonacci, which is like the price extension, the price zone, support and resistance zones based on mass psychology. And there are other things like trend lines and support lines, resistance lines, round numbers, etc. But we're going to focus just on those two at the moment. So what are we looking for? Something that just looks like that. When will be the safest time to buy if you want to really reduce your risk is when you see a movement that's greater than this, so it's an overbalance of price. And then on the first pullback, there will tend to be a pullback on a wave 2, like a wave 1, a wave 2. There will be a great time, which is just gives you an increased probability. And if you're not used to technical analysis and you're new, that's a safer time. If you're used to doing technical analysis, you've got a lot of experience under your belt, then actually you can just do the trend reversal, which is around this current zone at the moment. So now lastly, let's just look at the macro picture. If this is the wave 2 low, what tends to happen after a wave 2 low, and then how long would that normally take? Let's have a look. And by the way, if you like today's video, like, subscribe, hit the bell notification. We're close to 1,000 subscribers, so I appreciate you being in my first 1,000 subscribers. You know, a lot of you have said this channel is going to go to 10,000, 100,000, a million followers or a million subscribers. That would be just absolutely unbelievable, considering that I think 10 weeks ago we had 5. So we just really started doing a whole lot of this kind of valuable content. So I appreciate your feedback. So let's have a look. So macro picture, we've got this wave 1, we've got this wave 2. Again, remember I put a question mark. There's no guarantees, my friends. There's no guarantees, only probability. If you're buying, you take responsibility. Make sense? You take responsibility. If you make a 10x, a 20x, a 50x, that's you. Amazing job. If it doesn't unfold, hey, there's nothing against you, but you just take responsibility with the ups and the downs. That's important. Whether you're watching me or you're watching other YouTubers, if you're following blindly and not taking responsibility, that's not good because you can't learn. Whereas if you take full responsibility, all of a sudden, different ball game. All right, so let's just finish off on what's likely to happen, which is a wave 3. What's the time and price projections for a wave 3? If this ends up holding to be the low, which is highly probable, not guaranteed. Bitcoin's in this uncertain zone, and if it takes a big steep pullback, that can affect Polkadot and other cryptocurrencies, even those that have a lot of fundamental strength. It can create a bit of a panic and a short-term sell-off, so we could see potentially a lower low. Hey, look, we're just going with the probabilities, and that's important to know. So a wave 3 would look like this. Boom. But we can do better than that. We can do better than that. We can do much better than that. Let me just get rid of these lines here. Let me just get rid of these. We don't need these. And we don't need these. Yeah, let's just get rid of that as well. Cool. Yeah, so basically what we're anticipating is that we'll make an all-time new high. That the price will go above the previous wave 1 high. What was the previous wave 1 high on closing price? Closing price was, let's get the exact number. $39. 39. Let's call it $40. $40 or 39. I get that right? No, 47.79. Now, if we look at candlesticks, it will show that it's not that much higher. The wick was, the highest was, 47.97. It's not that far off. Cool. So let's just now clean this up. I want to give you a price, real clear price projection, and a time that we should anticipate. Because sometimes, people think it's going to happen tomorrow. That's not the case. It's not the case. It's got some work to do, right? It's got some work to do. So a typical wave 3 price projection is we measure the wave 1 low, which is down here, the wave 1 high, and project it from what looks like to be this wave 2 low, if it turns out to be the wave 2 low. If that's the case, the typical wave 3 is 1.618. Can be overextended to a 2.618, but let's just stick with the 1.618. You can see we drew this previously with the previous data, but now we're going to update it. In fact, let's just see how it compares to what we did previously. This was the pink box that I drew previously, based on what was looking, how it was unfolding a few weeks ago. So now let's just look at time. Typically, a wave 3 would take the same amount of time the wave 1 took. So the wave 1 took this amount of time, so we're just measuring this distance from here to here, projecting that forward from a wave 2. But what we want is the 100%, which is here. Bang. So now all of a sudden I'm going to update this information and go, boom, here. Now the pink box, you see, is quite a long pink box, is because I would have put 2.618 as an overextended. And when you got a strong project with a very bullish market, then all of a sudden, you can see that it will go likely to be in this range. But as the market unfolds, we can project just much more accurately when it's likely to end, a high probability end of a wave 5 of a wave 3, and that's when you want to really be taking the massive part of your profits. So let's just look at the date. The typical time for a wave 3 to complete will be December. So it's like around 5 months. We're talking about 5 months unfolding. That's the same amount of time it took for this wave 1 to unfold, from December 2020 until May. So it's around 5 months. And again, here, another 5 months. Can be longer, can be shorter, but that's the most common and most typical. So there you have it. Polkadot, have we reached the bottom? It looks likely, likely. Now we are projecting like really narrow. Like we haven't waited for a big move up where it's very obvious. We're now looking into the future, but based on Fibonacci price time, Elliott wave pattern on 3 degrees. We've got a wave 2, a wave ABC, and a 1, 2, 3, 4, 5 of a wave C. So we've got 3 degrees of wave counts. We've got price projections on 2 or 3 wave counts, which is when you get the cluster on multiple degrees of wave count, that makes it a higher probability. And now we've got momentum. Weekly is oversold, and the daily momentum has just done a bullish reversal. So we have a strong confluence of events. So if we was at the casino, this will be a high probable bet. Not a guaranteed bet, because anything can happen, but high probable. So it's you applying proper risk management. So if you like today's video, like, subscribe, hit the bell notification, and let me know. What do you find most valuable? Is it Elliott waves, or is it Fibonacci price projections? Price more than time, because I do that more commonly. Elliott waves or Fibonacci price? Let me know in the comments below, and I will see you soon. Oh, wait, we need a quote of the day. We need a quote of the day. Here we go. Oh, nearly forgot my quote of the day. We're still on the winning investment habits of Warren Buffett and George Soros. Let's just go on to chapter 11. Chapter 11, let's see. Start with the A's. I haven't read this one out yet, so I'm freestyling here. Let's just see what it is. Warren Buffett. If I'm interested in a company, I'll buy 100 shares of its competitors to get their annual reports. Okay, we're not doing that, right? We're not doing stocks and shares. So, okay, well, that's clever, right? All right, let's see what Albert Sense, oh, that's a very long name, but Albert says, discovery consists of seeing what everybody else has seen and thinking what nobody else has thought. Discovery consists of seeing what everyone else has seen. So everyone's seeing the price retracements. Polkadot has come back like what, nearly 78.6% from its all-time high, and thinking what nobody else has thought. Well, it might be the case that it's just a powerhouse project and it's hitting an all-time, well, a recent low, 78.6%, and then all-time new highs. All right, there you have it. I'll see you soon in the next video.